Let's get more on gold. Justin Lin is joining us from Global X. Justin, welcome back. So I've just spoken of that record run for gold that we've seen this week, taking out new records. What do you see is actually driving that at the moment?
Hi, Andrew. Thank you for having me. It's always a pleasure to be on Ausbiz. And from our perspective, we see three main drivers of gold right now, a really powerful rally. From the first point, we see the weakening USD, driven partly by Trump's attacks on the Fed independence. This is quite a powerful driver for the gold price right now, as it has been proven that an independent Fed is quite crucial to keeping a cap on inflation, keeping max employment, as well as keeping the local currency quite strong. So that has definitely shattered some investors' confidence in the US dollar, which tends to be a positive driver for gold prices. Second, we see interest rates coming down, and this is pretty much in the bag for most traders from their perspective. The September rate cut is coming. Jerome Powell at the Jackson Hole speech indicated that they're less concerned around inflation and more concerned around the employment and labor markets. So interest rates coming down are another positive for gold, as gold is a non-yielding asset and it doesn't have to contend with these high opportunity costs. Lastly, from a more technical standpoint, gold has been trading between 3250 and 3450 for about 4 months now, more than 4 months. And the outcome of that is that the speculative bullish positioning has actually come off quite significantly. So it's less bubbly, it's rebased at a very confident price, and this breakout to 3550 by traders over the past 5 days is an indication that traders are ready for the price to head higher.
All right, so breaking out of that consolidation range, where can it go to? Speculation that it could eclipse 4,000 by the end of the year.
So from our perspective, it really comes down to a accumulation of factors. So we talked about these three factors already driving the gold price forward. We will need to see them continuing to be strong for the price to reach 4,000 towards the end of the year. But we definitely see that as a distinct possibility. And another driver that we haven't really talked about is that over the past 2 years, this strong rally in gold has been driven by mostly new entrants to the market. So it's Asian ETF buyers, Chinese ETF buyers, really, and central banks accumulating gold. Western ETF buyers have been actually quite late and quite slow in terms of accumulating gold over the past few years. So as interest rates come down, we see that as a catalyst for them to step in and really push this rally higher.
Well, in fact, I see that the World Gold Council saying last week saw the strongest weekly gold ETF inflows since mid-April, when we saw that significant rally. What are you seeing there at Global X at the moment, Justin, with your ETFs?
Absolutely. So we are actually seeing some of the strongest flows that we've ever recorded as one of the premier gold ETF issuers in Australia. So we do offer the Global X physical gold structured product, which is under the ticker code GOLD. It is the biggest gold product in Australia with the longest track record. And over this year to date, we've seen more than $350 million in inflows, which would make it the second strongest year ever, only behind 2020, so COVID-19, where we saw roughly $700 million of inflows over the same period. So really a very, very strong demand base right now by Western investors, as well as investors overall for gold, as we see a more volatile geopolitical environment and a interesting policy direction by the US.
Now, Justin, of course, it's not just gold, silver also getting a bit as well.
Yeah, so gold and silver definitely, they naturally have this relationship. A lot of commodities traders will be aware of this ratio called the gold-silver ratio. And over the first half of the year, we basically saw silver trade kind of in tandem with gold, because silver is 50% industrial and 50% precious. And given that the economic outlook was a bit mixed, people weren't sure on the industrial element. Now that as we're heading towards rate cuts and the economic environment tends to be boosted by rate cuts, this industrial element of silver is starting to pick up as well. So we're seeing the strong momentum on the gold side and the strong momentum from the industrial side. So if the economic signals continue to point to the upside, then silver, as we can see, will probably be one of the stronger performers.
And what's a good way to get exposure there?
So GlobalX also offers the largest and only silver fund in Australia under the ticker code ETPMAG. So that's the physical silver structured product. And it is definitely one of the best ways for investors to gain direct physical access to silver on the Australian market.